Good afternoon, I'm Brigid Taylor and this is Currency Wars. We can have a look and see what's happening on the wires. The slowing trend of the Chinese GDP to 6.9% at the end of 2015 caused global markets to punish economies with a large reliance on China as a trading partner. The People Bank of China announced this week that it would lower bank reserve ratios, and this is hoping to incentivize better lending conditions to the cash-strapped corporate China. Meanwhile, the US FOMC will be meeting in 2 weeks' time to discuss the outlook for the US economy and their interest rates. The continued gradual growth in the jobs market, consumer spending and inflation in the US are likely to be offset by global financial market volatility, making the case for a hike in March more unlikely. Meanwhile, domestic politics ahead of the 2016 provincial elections sees credibility issues being raised with regards to various key players. The rand enjoyed significant gains ahead of the budget to trade 15.06 and lost around 50 cents post the statement. However, the dispute recently between SARS Commissioner Tom Moyane and the Finance Minister Pravin Gordhan saw the rand lose a further ground and trade up to 16.20 before retreating back to 15.60 after statements by the ANC in support of Gordhan. This really highlights the weight placed on the confidence of investors in trusting the Finance Ministry to both deliver on its budget strategy and entice growth back into the South African economy. Right, now that we've seen the lay of the land, I'd like to welcome my guests today, Andre Cilliers from Treasury and Alers from Kaon Capital. It's nice to have a colleague on the show, Luke. Welcome. Guys, I think it's been tumultuous, but I mean, we really aren't focusing on the global economy at the moment. Maybe you can just give us a bit of your view. I mean, you're sitting in Cape Town, which is DA run predominantly. We're sitting in Joburg. There's a lot of different dynamics politically, especially ahead of these provincial elections. And the play out in terms of what we're seeing on the rand, Andre, talk us through that.
Yes, if you look at the rand, then, I mean, everybody always speaks about international and domestic and the 60-40 sort of international taking predominance over the 40% influencing the rand. But I think in the last week or two, this has changed completely, and I think we're in an 80-20 situation at the moment. And it's not 80 international and 20 local, it's 80 local and 20 international.
Well, internationally, there's not a hell of a lot going on, Andre, nothing that's out of the ordinary. And maybe, Luke, you can jump in here with regards to the politics. So if we look at South Africa, that budget statement was so important. Everybody was waiting on tenterhooks, looking for the budget statement. It came out, he said the right thing, and now we've got this foray. What is your feeling, and how do you think that it's, what would your advice be in terms of managing that?
I think the budget was maybe a little bit underwhelming. And I think, with the sort of the mudslinging that's going on at the moment, it's obviously taken centre stage and taken focus away from what the budget was trying to say and putting people in a bit of a situation of what's next, what are they going to say next. It's, election year, what's going to happen? Are people going to say more things that come out of the woodwork?
But it's the credibility, and that's unfortunately for us something that we have to keep in mind, because it is about sentiment over credibility, particular to those type of roles. If we look at the Treasury function, where South Africa is in the global picture, we look at what the ratings agencies have said, the growth forecast has to change. We have to see a dynamic that moves it in the right direction. The budget was good from that regard, and we discussed this on the show, saying it really will then be about that the integration between the private sector, the public sector, looking at provincial delivery of all of the promises, etc. But it is about the Treasury and the management of the Treasury and the sentiment around that.
At last week's program, we spoke about the budget, and both John and myself agreed that if you look at what was said in the budget, it was actually good things that were said in the budget. And then I think it was me that said, the problem is that the market does not believe that Gordhan has got the credibility and the backing to push it through.
But then we had the statements come out.
Comes these statements and this rift in the ANC and two camps coming in. And that places a huge and a massive issue around the credibility and their ability to actually do what they've said.
But now, Luke, you've worked at offshore institutions looking at global investors that are predominantly looking at emerging markets. Talk us through the viewpoints of these types of dynamics. Yes, we understand them from a domestic perspective, but in the eyes of an offshore investor, what does that really mean, and how much of an impetus do we need to place on this?
Well, I think as an offshore investor, you're looking at the globe and you're looking at where to park your money. So the question is South Africa attractive on a global stage? And I think, given the headwinds that we've got at the moment with low GDP growth, what is going to be high inflation coming in, what are, looking at other countries, other markets that you can invest in. Australia, for instance, as another resource-heavy economy, had very good GDP growth figures out yesterday. So it's a question of where to park your money. And if the sort of overall story isn't really attractive, money's going to go elsewhere. And I think that's what international investors' sort of concern is at the moment: is where is the growth going to come from that take South Africa to the next level.
So if you're a global investor, I just want to park on this a little bit, is we've got great interest rates. I mean, if we look at, we're looking at negative interest rates out of Japan, negative interest rates in the Eurozone. We've got really good rates in South Africa. You're not worried about real rates if you're a foreign investor because you're not having the inflation implications, especially because inflation's relatively low globally. The stability of the rand, however, is the swinger often. So just talk us through that dynamic when you're looking for that parking of your money in an investment that has got the high yield, but it's that uncertainty around the currency.
And I think that is going to be hopefully a bit of a sort of a volatility dampening effect that comes through from the higher interest rates in South Africa versus negative interest rates in other countries. And that should hopefully get a class of investor interested in South Africa that's just looking at the yield pickup and playing the carry trade, essentially. But there is still the sort of the investors that are looking at the growth dynamic within South Africa as a larger thing. So I think you've got sort of play on both sides.
So we must keep that in mind. I mean, Andre also talked to us with regards to the growth. So we had GDP come out yesterday. It was obviously a bit disappointing, concerning that we may be going into this, well, we are in a sort of stagflationary environment, but potentially into recession. Just talk us through the growth outlook in this current environment with these cost push pressures that we're starting to see if we look at the hikes in meat prices, poultry prices, eggs, typical maize, things that are general consumable items, and we've got the slow growth. How do you see the rand performing in that type of environment? Is it, with the talk of the budget and this cohesive strategy by Treasury with private sector and public sector, do you still think that there's an opportunity for the private sector to invest more and help to give momentum to that growth?
I think so, yes, because the private sector actually sits on a lot of cash. Opposed to somebody like China, for instance, where they are cash strapped on the corporate side, our corporates are actually cash rich. So they have money to put back into the economy. Problem is that no matter what they put back, somebody's going to actually buy the goods. And that's becoming increasingly under pressure. Now, if you look at the GDP figures that came out yesterday, 0.6%, and you look at the budget where it was placed at 0.9% for the year, once again, we start with credibility issues. How sure are we that the figures are actually going to materialize? How well can we look forward to what happens in October when the medium-term budget speech gets delivered? Yesterday, vehicle sales was revised downwards again. Advantage there is that your export side of vehicles, for instance, was revised upwards. So there is some positiveness. I'm still of the opinion that in the second half of the year, we are going to see that the whole world actually comes out of the slump and into slow marginal growth. And that will help us.
We must just be ready for it.
We must just be ready for it, yes.
So I'm going to put you guys on the block. We're going to look about, talk about the views for the week ahead. And you're 100% right. I think that that's where the politics needs to be moved out the way, and we really need to focus on this growth momentum. Okay, guys, so this is it. I am going to give our new guest an opportunity to start. Luke, you give us your view for the week ahead.
Well, I think with the rand where it is at the moment, I think there's support at the 1550 level. 1550 level, and resistance at about the 1590 level. I think if you drop below the 1550 level, we could head down to 1510, and obviously breaking out of 1590, head sharply higher. I think in the near term, I think we're going to bounce around a bit, around this sort of 60 level. But I think longer term, I still think there's going to be a depreciation, a slow, gradual depreciation.
Okay, and you, have you got any difference to that? And give us some views on your Euro Rand and Pound Rand as well.
The 1550 levels is a crucial one. I sort of favour that we're going to break that a little bit and trade towards the 1525, and then have a range of 1525, 1570, 75. But I would recommend to the importers that if you see the 25 levels, cover your short-term commitments. On the euro rand, I think we trade somewhere down to the 16.65 levels, and then a range of 16.65 to 17, and the pound hovering somewhere between 21.5 and 22.
Great stuff. Thank you very much. Thank you very much for being with me today. So just in conclusion, trading strategy for the week, we are watching on the dollar rand at 15.50 level. It is quite a significant level. We're looking for further strength, and both Andre and Luke looking for breaks possibly down to sort of 15.25, which also equates to strengthening bias on the pound rand and on the euro rand. So if you're an importer, take advantage if you do see those dips. However, that long-term trajectory towards the upside on a weaker rand and weaker cross rates remains intact. I'd like to thank my guests again, Andre and Luke. And from us at CNBC, you are more than welcome to send any of your questions or comments to @CurrencyWars410 or to myself at Kaon Capital for your personal response to the FX markets. Until next week, good luck in the trenches.